morning, insiders. Welcome to another edition of your Monday download. Today's video is going to be about Bank of America's Equator system. And we have a couple of previous videos that we've done, introductions to Equator, kind of overviews of the Equator system. And today we're going to be talking about counteroffers in the Equator system. Now, I know that for all of our Insider Network agents, you don't have to worry about the interface with the Equator system simply because Alliance Short Sales does all of that for you. You never have to log in, you never have to deal with tasks, you never have to deal with any of that. However, understanding what Bank of America's perspective in the counteroffer process is going to help you better communicate that with the parties to the transaction. It's completely counterintuitive to what you as a real estate agent would consider a counteroffer in normal real estate. So let's dive in here. This video is going to be highly valuable for anybody that hasn't dealt with Equator before. And really, most of us dealing with short sales are dealing with Bank of America and Equator on a regular basis. The Bank of America owns the largest amount, or services the largest amount of loans in the United States. So if it's not a first mortgage that's Bank of America, often it's a second mortgage. And many times it's both. So let's dive in and learn a little bit about how you can better understand the process of counteroffers and communicate that with parties in the transaction. So I'm actually going to read these items from a letter directly from Bank of America's short sale department so that you can hear right from them how they're doing this. All right, so the letter starts out, realtors have told us that better they understand the counteroffer process, the more successful they are in closing short sales. That makes sense. Thanks for realizing that and getting some information out. The following facts related to the counteroffer process are critical to closing short sales in Equator. All right, fact number one. Your acceptance of the counteroffer terms does not mean the transaction is approved. Now, this is where it's probably the most counterintuitive, because as a real estate professional, when a seller counters a buyer on specific terms, and that buyer accepts those terms, it goes to reason that there is now an approval. That's where mutual acceptance happens. If there's an offer and then a counteroffer and then an acceptance of those terms, we've now got mutual acceptance, right? So it would, logically, if you take yourself down that path, if the bank is countering on terms and the buyer is accepting and the seller are accepting those terms, then you would think that that means we're now going to have an approval letter because we've accepted the terms that the lender has countered us with. Well, that's not the case. Here's kind of their dissertation. Acceptance of the counteroffer means that Bank of America will take the next step of presenting the transaction for approval to the investor. Interesting. In some short sales, multiple approvals may be necessary from others, including the second lien holder, mortgage insurer, and Bank of America senior management. So what they're saying, in essence, is the counteroffer is simply them saying, we're not going to send this to anybody that has to approve it until these terms are changed. So we're not going to even send it to the investor to look at until you raise your purchase price to $255,000, for example. Your reason says, oh, well, if we accept a $255,000 purchase price, that means they're going to get it approved. Not the case. They're just going to send it to the investor. That leads us into fact number two. Fact number two, the terms of the accepted counteroffer may be approved, declined, or changed. Let me just read what they have to say here. Any of the parties reviewing the transaction can change the terms of the transaction, approve, or decline it. So, even though originally you would think, oh, that means that they're going to approve it, they're just now sending it to the investor. The investor could look at that and say, you know what, $255 is just not going to cut it based on the information that I think I have. We won't approve this for less than $260,000, which means that your buyer could get a second counteroffer. So if you haven't properly positioned them saying, hey, here's what the terms are the bank said we have to submit it to the investor. If the investor has different terms or wants different terms, they may counter you again. So if you're communicating that properly, your buyer is not going to get put out by a second counteroffer. Because what happens is if they think, oh, well, we accepted $255,000, that means we're going to get an accepted short sale. In their mind, they're moving into the house, right? And now all of a sudden the bank's coming back saying, well, we need a $260,000 purchase price. And the borrower, the buyer, is now completely put out. Like, what do you mean? You said $255. $255 is all I can afford. I've I've spent the rest of the money I had, or I really couldn't go above 255 to begin with. And you're going to have frustration, you're going to have discontent buyers, and buyers that simply get angry and walk away from the transaction simply because it wasn't communicated correctly to them as to what this first counteroffer meant. By communicating to them that it could change, that there are other parties to review this, and that they may have changes to make, so just kind of know that this is still a work in progress. If that counteroffer comes back from the investor, the buyer's going to understand, oh, okay, here's our second counteroffer. Fact number 3, the counteroffer may have an expiration date. It's good to know. Please reply to the counteroffer before the expiration date. If you don't reply by the expiration date, the transaction will be rejected, and you must restart the process by initiating the short sale and resubmitting documents. This is really important. When our office calls you and says, hey, these are the terms, whether it's a counter offer from the bank or additional documentation that they're requesting, they always set a deadline. They set an expiration date, if you will, on those items. And if we don't respond to them by that expiration date, they're going to say, okay, game over, close it out. You guys can start at the beginning again if you get what we needed. So, and it sometimes is a very short period of time. Sometimes it's 48 hours, 72 hours, can be, I suppose, even less, but they usually give a few days. And so if you're needing to get signatures on an addendum or different things in that short period of time, I understand that it can be an inconvenience, but you kind of have to hustle on that. And the problem is we go back to other videos where the electronic signatures would make it a lot easier and faster. The banks won't accept those electronic signatures, so that creates even more work and potentially a slowdown there too. So just realize when our office calls you and says, hey, Bank of America said that they need this and that by this particular date, that's not an arbitrary date that we're picking out of the air. It's actually a date that they've given us that they're going to close the file out, and probably what that's going to do is add several weeks to your process. So don't take that date lightly. Make sure you get the information over. All right, fact number 4, and this is not going to apply to any of our agents that have Alliance Short Sales doing your negotiations, because we're the interface with Equator and we know how to do all of this stuff. But for the rest of you, this is going to be highly valuable. Fact number 4, the counteroffer must be accepted via the offers management tool in Equator. Let me just read this. To accept the counteroffer, go to the workflow section of Equator and select the offers needs response link. Select counteroffer and press the accept button in the counteroffer screen. You cannot accept a counteroffer via an Equator email to your negotiator. Seems like that would be a reasonable way to accept it, but they're not going to let you do it that way. So make sure you follow those instructions, get in there and accept it correctly. Otherwise, you're going to go past your expiration date. You'll probably have to start over. And I'm just wanting to give you that information to help you avoid that potential problem. Again, Alliance Short Sales, we do it all the time. So, we know where to go in and accept it properly as long as we get the information back in a timely fashion. So that's all I have today for your Monday download. I know this is going to be valuable information, especially if you haven't dealt with the Equator system for counteroffers before, or you haven't understood why a counteroffer is not locked in stone and why the bank's continuing to come back with changes after the fact. So have a great week. If you have questions or need help on anything, need to strategize about transactions, please give us a phone call. You can call our office. You can send me an email. We'd love to get on the phone and help you grow your short sale business. So we'll talk to you soon. Have a great one. Thanks for tuning in. Bye.